Hey everyone, welcome back to Corporate Decoder, the place where we translate financial jargon into plain English. And today we are diving into MidWestOne Financial Group's latest report. Did they hit their targets or are they stumbling? Let's find out. Alright, so on the 23rd of October of 2025, MidWestOne Financial Group Inc., or MOFG as they are known on the stock market, released their latest update. This report is essentially their way of telling the public and the investors exactly how they are doing financially. We are going to skip all the legal mumbo jumbo and get straight to the juicy financial bits. They are telling us about their earnings for the 3 months and 9 months that ended on the 30th of September of 2025. Think of this report as a snapshot of the company's health at that specific time. They have attached a press release giving us the highlights and a more detailed financial supplement. These documents are key to understanding their performance. We are going to focus on the numbers that truly matter for the business direction. MidWestone's main product, if you will, is their common stock. You can find it trading on the Nasdaq Stock Market LLC under the ticker symbol MOFG. This tells us where the company is listed and how people can buy and sell shares in it. Now let's get into the numbers from their financial supplement. This is where the real story unfolds. We are looking for trends, signs of growth, and any potential red flags. A company like MidWestone, which is a financial institution, the most important thing is how well they are managing money and generating profit. We want to see if their loans are performing well and if their investments are paying off. Are they lending more money and are those loans being repaid? That's the bread and butter of a bank or a financial holding company. When we look at the detailed financials, we want to see if revenue is going up. Revenue is the total money a company brings in before it pays any expenses. If revenue is growing consistently, it usually means they are selling more products or services, or their existing customers are spending more. Conversely, if revenue is shrinking, it's a sign that the company might be struggling to attract new business or keep existing customers happy. We also want to see if their expenses are under control. They might be bringing in more money, but if they are spending even more to do it, then they are not actually becoming more profitable. Profitability is the ultimate goal. Now let's say their net income, which is the profit after all. Expenses is up, that's a great sign. It means the company is efficiently run and is generating value for its shareholders. If net income is down, it could signal problems like rising costs, unexpected losses, or a slowdown in business activity. We also pay close attention to things like their loan loss provisions. This is money a bank sets aside to cover potential losses from loans that might not get repaid. If this number increases significantly, it suggests the bank is worried about the quality of its loans, and that could mean trouble for future earnings. Looking at their assets and liabilities is also crucial. Assets are what the company owns, like cash and loans they have made. Liabilities are what they owe, like deposits from customers and money borrowed. We want to see assets growing, particularly interest-earning assets, while liabilities remain manageable. A healthy balance sheet shows a company that's stable and has the resources to fund its operations and growth. In terms of their performance for the 9 months ended the 30th of September 2025, we are going to be looking at the growth in loans and deposits. How much have they expanded their lending activities, and have they attracted more customer deposits, which is their primary source of funds? We will also investigate their interest income and interest expense. The difference, the net interest income, is the core profitability driver for most financial institutions. An expansion in net interest income usually means they are effectively managing their interest rate spread. We also need to keep an eye on their non-interest income. This can come from fees for services like wealth management or transaction processing. Growth in this area suggests diversification of revenue streams, which can make the company more resilient. And the report is signed off by Barry S. Ray, the Chief Financial Officer. This indicates that the company's top financial executive has reviewed and approved these numbers. Now, looking at these results more broadly, MidWestone Financial Group appears to be navigating the current economic landscape. The key is whether they can sustain this performance through consistent, prudent management and strategic lending practices. A major strength for a regional bank like this is its local market knowledge and customer relationships. However, they also face intense competition from larger national banks and nimble fintech companies. Their ability to innovate and adapt to changing customer preferences while maintaining robust risk management will determine their long-term success. The risks for a company like this often revolve around interest rate fluctuations, credit quality of their loan portfolio, and regulatory changes. For instance, if interest rates rise significantly, it can increase their cost of funds and potentially slow down loan demand. If the economy experiences a downturn, many borrowers might struggle to repay loans, leading to higher loan losses. The reports usually detail these risks, and it's important for investors to understand them. Opportunities could lie in expanding into new markets or offering new digital banking services to attract younger customers. In conclusion, MidWestOne Financial Group has presented its latest financial picture through this filing. The details in the press release and financial supplement are crucial for understanding their operational health and future prospects. While they appear to be on a stable path, continued vigilance in managing risks and a keen eye on market trends will be essential for their sustained growth and profitability. Alright, that is our breakdown of MidWestOne Financial Group's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.